Okay, we're recording. Thank you very much for getting on the webinar, the Zero to Millionaire webinar. My name again is Rick Silva. And I just want to start by saying you're going to hear some things tonight. There's a possibility you haven't heard it said this way, or maybe you haven't even heard some of these things before. And some of them you're going to go, that guy's crazy. Some you're going to go, I never thought of that. So what I've done over the last 20 years, 25 years, listened to 9,000 hours of education in my car, read 500 or 600 books on every kind of topic you could think of, from networking to sales to money, reading just everything I can get my hands on. And then I have some very, very, very wealthy and successful mentors. And when I meet with them, I take notes. And I had all these notes, and I'm looking at it going, okay, in 2008, I'm broke, I'm bankrupt, I'm living in my office, I'm basically homeless, I'm showering at the gym, to financially free multimillionaire now in 5.5 or 6 years, because I started this webinar when it was 5 years. It's about 6.5 years now. And I thought, why do I keep the information? Why don't I give some of it to other people as much as I can? And we would have a 10-hour webinar if we did it all, but just some concepts that might help you in your path to earning more, having more. So with that, let's begin with some of the concepts that I think are the most important. So it's called Zero to Millionaire, the 7 principles I use to become financially free. Technically, there's dozens of principles in here. It's a cool title. It gets people attracted to it, but it's the many principles I use to become financially free. I have 2 outcomes for our time together. Number 1 is to share with you tons of principles that have changed my life. And then I've got a way to help you create wealth if you're interested and if you qualify, and I'll tell you about that at the end. I'm not going to try to sell you anything. It's a business that I have with my wife where we help people invest, and I'll tell you all about it at the end. So after the many principles, I have more principles. And then I'll tell you how I could help you in the future if you're interested. So I do have some rules for these webinars. I don't teach anybody how to get rich quick. I don't know how to get rich quick. And I'm a professional networker. Not only do I help people invest with my wife, but I've been a professional networker teaching networking for the last 14 years. And one of my favorite sayings is it's network, not net lazy. You got to put in the work. You have got to put in the work. Relax and just listen. I know you're at home. Well, you may not be at home. You might be in your office, but you gave me this hour when you logged in. Just hang out with me for an hour and just listen. Try not to check your email or look at your phone. Just be with me for an hour. And then let's have some fun. I'm going to try to shake you up. I'm going to try to get you to think. Hopefully I'll get you to smile a little bit. But I just want to get you to think differently. So if you were invited by Eric Lofholm, some of you got an email from me, and maybe you know me another way besides Eric, but this one's primarily the one that's Eric's promoting. So just you know our relationship. Now Eric's 6'3" or 6'4", so I'm 5'11", but he makes me look short. So I've known Eric for over, I think it's like 14 years now. He's one of my 4 main mentors. We've done 11 sales and networking seminars together. He's been to my home. I think I've been to his house once. He's been to my house 3 or 4 times. Very cool when you hire somebody to consult you years ago, and then it kind of flips back to where it's the reverse. And that's what's happened with our relationship. So that's a quote from Eric on the bottom. Rick Silva is one of my mentors. I'm excited to have all of you meet him and be introduced to some of his ideas on wealth building. Eric Lofholm. So that was flattering. That was very cool. He offered that, and I really appreciate it. So a little bit about me. Again, I'm Rick Silva. I'm a former engineer with Eastman Kodak. Those of you that are under 30 or 35 years old, you've never even heard of Eastman Kodak. But when I worked there in the 90s, it was the 4th largest company in the world. It was a giant company. Then I was a recruiter with Cisco Systems. And then I sold jewelry for a little while after that. And I met a lady running networking groups, and I started running referral groups 14 years ago. And that's what I've been doing, teaching networking. I created a couple courses that I've sold all over the world. And I still to this day have 9 referral groups that I manage. 2008, bankrupt. 2008, 2009, bankrupt, living in my office, showering at the gym. Then I met my wife, and I'll show you how I was able to create tremendous wealth the last 5 or 6 years. My financial background, a little bit, if you will. 1998 to 2001, I was a recruiter, and I did the staffing with high-tech firms. So what we learned very early on was to work with venture capitalists. We cut our fee back, and I took stock in all these startups. So on paper, 29 years old, multimillionaire. And then you guys know what happened to me in 2001. If you were in the dot-com world, the dot-com crash, I lost everything. I was penniless in 2001. Didn't go bankrupt, though. I was able to recover. And then in 2008 is when I got handed to me. So I was primarily one-on-one coaching real estate agents and mortgage lenders. And then with the mortgage meltdown of 2008, I got divorced in February of 2008. My house went $300,000 under market. So I walked from it. My ex-wife still lives there to this day with my kids. I did a deed of trust transfer and I handed her the house. So I had lost millions in the stock market, and I lost tons in the residential market, so it freaked me out. I didn't know what I was going to do. I knew I'd become wealthy someday. I didn't know how. I had no clue how until my wife came into my life, and I'll tell you more about that later. She helps people invest in land. She joins one of my networking groups, and I just let that go because I thought investing in land was for the wealthy only. So the first 6 or 7 months we were together, I never really paid attention to it. When I finally did, that's when my life changed. So the 3 main ways that we all were taught to, well, the 2 ways we're all taught to invest primarily is houses and stocks. The third is land. I'll tell you more about that later. So some of the principles we're going to cover today, one of them is the ego hat and who your mentors are, the difference between an investor and a speculator, some ideas on not over leveraging. If you're a networker and you've heard the term power partner, I'm going to give you a few quick ideas on power partnering. That's a 3-day seminar in 5 or 6 minutes. We're going to talk about where you put your money, i.e. 401ks and bank accounts. Number 6 is the missing link in investing. And number 7 is who do you listen to? And are you open to opportunities? All right, so the ego hat. So I'm doing all these seminars. I'm selling courses in 7 countries. I'm signing autographs. I shared the stage with Les Brown, tons of seminars with Eric Lofholm. I think I'm a fairly big deal in the networking world, and I walk into the office of my wife's company and I sit with the owners, and he looks at me and he goes, I'm gonna teach you something that his mentor taught him that helped make him wealthy. And he looks at me and he goes, I know you're a big deal in your world. He goes, but when you walk in here, you really don't know anything about what we do. So if you can take your ego hat off when you walk into our office, just take your ego hat off, hang it at the door, and listen to what we have to teach you, I can make you wealthy. If you can't take the ego hat off, you're going to stay broke. That hit me like a ton of bricks. I never really had anybody kind of talk to me like that, and I loved it. So when I'm around my mentors, the words like, I already know that, got it, totally know all about that, or if you cross your arms, or if you say he doesn't know what he's talking about. So if you're saying things like, I know all about that, totally get it, already do all those things, then it's going to be hard to learn from someone if the topic they're talking about, like when I'm teaching networking, I'll have people come up to me before the seminar and go, oh, networking, thanks for the refresher. I know all about networking, and they make $60,000 a year. I mean, how can you know all there is to know about networking? Make $60,000 a week. That's another story. make 60 grand a year, you're going to come up to me and say, I know everything. Well, you're not going to learn. So that when people do that, I already know they're not going to learn anything at my seminars. So with this, if you meet somebody wealthier than you, more successful than you, maybe, just maybe, take the ego hat off and go, let me see if there's something here that I can learn. Let me just listen and learn. Maybe there's something here. Find mentors. So this is the big one for me. So what I do is I try to buy books and I read books about people that are much more successful than me, and then I hang around with people much more successful than I am. So what you want to do in your industry, now, no matter what industry you're in, all of you on here, and I don't know all of you personally, I know a few of you, no matter what you do for a living, there is someone in your industry right now that makes 10 times more than you. There are many people out there that make 2, 3, 4, 5, 6, 10, 20, 30 times more than you that would be more than willing to mentor you, coach you, and teach you if you are more than willing to ask. That's the biggest thing. Most people are not willing to ask for the help. Now, Brian Tracy always has this saying, success leaves tracks. And it came true in my life in two ways. But number one, financially, just by following people wealthier than me. But I want to give you an example of my father-in-law. So some of you know my wife, Marcella. She's from New Mexico. My father-in-law is a very, very well-known hunter in New Mexico. That's what he did for a living for 45 years. He's just going to turn 70 when I'm out there for Christmas this year. And we will, about the third week of December, be hiking up a giant mountain looking for a Christmas tree to cut down. And like it is every year, my wife and he will take off, and I'm in pretty good shape. There is no possible way I can keep up with them. And the first time, 4 or 5 years ago, I went out there, they left me in the dust. I was freaking out. I had a gun on my hip, and I had my hand on it because I don't know if there's bears or mountain lions. I'm freaking out. I know where the car is, but I don't know where they went. That year, I was freaked out. The following year, I looked down, and his tracks were there. I just walked in his footsteps, and I found them, and they were actually pretty impressed. It sounds silly, but what I'm telling you is he's way better than me, and I found him by following in his footsteps. Find somebody more successful than you in your industry and walk in their steps. Do what they did. You'll get the same thing. It could take longer, but if you want success, find other people. Now, if you got off the webinar right now and just started looking for people more successful than you, I've done my job. If I can help one of you become more successful just by finding other people to talk to, then this whole entire webinar, I'm successful. That's how I feel. So you want to have coaches. Now, I've spent thousands and thousands of hours with Brian Tracy. Brian Tracy is my favorite of all the speakers out there. He just resonates the best with me. I also like Bob Proctor, Zig Ziglar, Jim Rohn. You guys know I've done a lot of work with Eric. And then I have mentors in my land business that have helped me tremendously. So the next thing I want to talk to you about, next concept, is the difference between an investor and a speculator. So let's just go to the top guy and see what he has to say about it. So the difference between an investor and a speculator: an investor buys an asset based on what it will do over time. Never buy anything you can't hold for 10 years. A speculator buys and sells on the movement of the price going up or down. I got a hot stock tip. Hey, I heard about this new thing. Hey, I heard this industry is doing well. Generally, if you've heard about the industry, it's too late. Or if you've heard about the stock, it's too late. So you got to invest generally with monies that you don't have a problem with letting sit for 10 years. This is the stock market to me. I don't have a dollar in the stock market. I don't have a dollar in anything except one thing, and it's definitely not stocks. I've lost too many millions of dollars in the stock market to think it's good for me. It's not something that I like because it freaks me out too much when it's going up and down. So I'm not going to read all the words on a lot of these slides. There's a lot of information on these pages. Again, this is being recorded. I'm going to send you the recording. You can watch this on YouTube whenever you want. You can send it out to other people if you'd like. So the main thing is in yellow, typically high-risk investments that are almost akin to gambling fall under the umbrella of speculation, whereas lower-risk investments based on fundamentals and analysis fall into the category of investing. So we're just going to flip gears here and talk about leveraging. So those of you who in 2002 to 2007 did what so many people I have consulted with did, especially if you live in the Bay Area in California. Your house was going up $200,000-$300,000 a year in equity. So what a lot of people did is they bought a home, and then let's say they put $200,000 down. Then that house goes up $150,000. They refinance, take the $150,000 out, buy two homes. 6 months, a year later, those each go up $150,000. They refinance those, take that $300,000 or $400,000, buy four more homes. And then 6, 8, 10 months later, they refinance those, and all of a sudden they own 10 or 12 homes. I've met dozens and dozens of people that over leveraged and bought all these homes because they think cash flow is going to do something for them. And then when the crash of 2008 came, the wealthiest people I ever met became the brokest people I ever met. I have a real issue with any type of, and this is a building, a business, a house, any investment where you take out a loan. When you start looking at how much those loan payments are going to cost you over the 30 years you own the home, the house has to double in value just to break even. I'm not a big fan of anything where you're paying other people interest. I pay cash for everything. I'm just not a big believer in over leveraging. This is coming from people that are billionaires that have taught me this, not from somebody worth $500,000 that makes 50 grand a year. This is from the wealthiest people I've ever met in my life. Tell me, don't have debt on anything, especially investments. This is one of their favorite sayings, one of my mentors' favorite sayings. The reason we have stress is because we have debt. If you write down the top 10 things, do this right after the webinar if you want, write down the top 10 things that are in your mind right now. Generally, 8 to 10 of them involve money or the lack thereof. Bob Proctor always says, the reason I want to see you become wealthy is because when you make the list of the top 10 things on your mind, money is only 1 or 2 of the 10 things. It's not 8 to 10. That stress, most marriages end over it. Illnesses end over it. Alcoholism, a lot of bad problems come from stress. One of the reasons we have stress is because we over leverage ourselves. And I'm going to go into another one right now that explains why we have stress. You have this to read later. It's very difficult for me to explain the wedge. So if you can just listen to me for a second, and then you can read this later if you want. But the wedge theory is from Brian Tracy. So I want you to think about 10 or 15 or 20 or 25 years ago. There's a possibility you make more now than you did when you were in your teens. And if you're in your 20s, you make more than when you were in your teens. If you're in your 30s, you probably make more now than when you were in your 20s. If you're in your 40s, you probably make now more than you did when you're in your 30s, 20s, and teens. As a general rule, may not be true for any of you. Maybe you guys are outside the norm, but 95% of all the people in the world, what I'm about to say is true for. As we make more, we spend more. As we make more, our debt goes up. Once I get that raise, I'll be fine. You get the raise, 3 months later, you're broke. Once I get that bonus check, you get the bonus check and you blow it, and you still don't have any more money. If you ever want to become wealthy, if you ever want to retire, you have to learn something called the wedge. So I want you guys, if you can just do this, I can't correct you on it, but I can give you an idea how to do it. Touch your wrists together. Touch your wrists together. And then point your fingers out where you're creating a V. Okay? So touch your wrists together, point your fingers out like you're creating a V. Your wrists, okay? Your left wrist is how much you make. Your right wrist is how much you spend. The bigger gap between how much you make and how much you spend, look at your fingertips. Look how wide your fingertips are. The more you make, the less you spend, Okay, the gap between your fingers, that in me it looks like about 6 or 7 inch gap. That 6 or 7 inch gap is the money you use to invest so someday you can become wealthy and retire. Now, touch your wrists together and touch your fingers together. That is your income and your expenses being the same. You tell me, and I don't want you to start typing on the screen because I already know. You tell me how you're going to retire or ever become wealthy. You will not. It's impossible. You have got to create a wedge. So touch your wrists together, point your fingers out again so you have the big giant wedge between your fingertips. You have got to learn how to drive a wedge in between how much you earn and how much you spend, or you're never going to retire. So that's Parkinson's law, and we have to learn how to break Parkinson's law. Parkinson's law basically says the more you make, the more you spend. So there's 2 laws we have to break, and there's only 2 laws we have got to break. We have to follow all the other laws except 2. One is Parkinson's law. You have to learn to break it or you're never going to become wealthy. And the other law you have to learn to break when you fly is the law of gravity. Other than that, follow every law. But you got to break the law of gravity if you want to stay in the air. And you got to break Parkinson's law if you want to become wealthy. All right. Here's just, when I told you there were 7 principles, there's a ton more than there's 7 on the screen. So one of the things that actually most of these things I just learned from very, very wealthy people. One of them is you must learn to outpace inflation. That's why I invest in land. Next one, ROI in creating audio courses. Now, whether I did it for years where I burnt them on a CD. I had the CD burner here, the tower, the printer. I did all of my own courses here in my home. Now I do it all in memory stick. Maybe someday when I retire from being a land investor, I might put up one of those fancy websites and put all my courses on the site. That's just not where my interest is right now. But I want to tell you the ROI on creating audio courses. So I spent 6 months, 6 a.m. to 9 a.m., 7 days a week, never took a day off for 6 months to create my Science of Business Networking course. It's 10 hours, it's 12 courses. That course sells for $197. I've sold it in 7 countries. I don't even know how many copies I've sold at this point. At $197, when I was burning the CDs and creating the course, my hard cost was between $18 and $20, depending on how much I could get the cases for if they were on sale. Let's say $19. I'm selling it for $197. My hard cost is $19. That's 10 times return. If you do it virtually and you put it up on a website, once you've covered the cost of the site, then your return on investment is basically infinity. I highly recommend creating courses, doing talks and selling those courses. It's unbelievably, it's one of the most profitable things you can do. My coaching is $250 an hour, and I only do that a few hours a month because that is not where I earn my income. But if people want my help, I'll do it. I just don't promote it. It's $250 an hour. I'm trading time for money. You can't get wealthy doing that either. But I highly recommend creating courses. Okay. The next one, this one was drilled into my head so hard I can't tell you. I'm not going to drill it as hard into you as it was drilled into me. Let me get a sip of water here. Hold on. So a lot of people go, well, I have a 401k or I have this account and it owns gold, or I'm thinking about buying gold. I'm going to buy gold. Blah, 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 blah. Gold, gold, gold. And I've talked to many, many people in my financial side of my life saying, I own gold. Fantastic. Where is it? This is what my mentor was saying to me. And I didn't own gold, but he said this is what he would say to people. Awesome. You own gold. Where is it? It's in my account. Where's the gold? You said you own gold. Where is it? Well, I own shares. Do you actually have gold? No. So this is how it was explained to me. Gold is an absolutely horrible investment. I'm going to give you an example why. But you should own it. You absolutely should own gold. You should own actual gold that you can put your hands on and touch. Because gold is not a good investment, but gold is a vibrational function that attracts more gold. So owning gold can help you increase your income. But it is an investment, is horrible. Let me explain. It has never and will never in the history of the world outpace inflation. I'm going to give you an example. At the time of Christ, 1 ounce of gold could buy a robe, a belt, and a beautiful pair of sandals. In 2017, 1 ounce of gold, if you're lucky, can buy you a nice suit, a nice belt, and a nice pair of shoes if you're lucky. It's never outpaced inflation. It never will. If you're buying gold as something you think that's going to make you wealthy, you're making a huge mistake. But if you buy little gold coins and gold bars, that can help you increase your income. That's what was taught to me by somebody worth hundreds and hundreds and hundreds of millions of dollars. I'm sure you've heard it other ways. The person that told it to you, were they wealthy or were they poor or middle class? That's what you always have to ask yourself. If you want to become wealthy, you have got to know why. Your why has got to be big enough or you will not become wealthy. What are you going to do with the money? Who are you going to help? It has to be about more. Well, when I get wealthy, I'm going to buy a house. That's not going to get you wealthy. It's got to be about other people besides you. No matter what you invest in, whether it's land or whatever it is, make sure you diversify. This is also from one of my best mentors. If you have credit cards, pay them off at the end of the month. If I can't pay it off at the end of the month, then wait 7 days to make the purchase to decide if you really need it. If I absolutely need it, then I can only buy it if I can have it paid off in the next 8 weeks. Just ideas on how to keep your costs and expenses lower. Now, if you have a job, this one's very difficult, and I understand that. And if you can't do this, just do what you can. This is the life I lead. This is because I'm self-employed. My income is over $600,000 a year. Just leave it at that. So I can do this a little easier than some people can, but you keep working and you'll get your income up there too. My life is 1/3 taxes, 1/3 my lifestyle, and 1/3 I invest. So I live on 1/3 of my income. So when we were talking about that wedge between what you earn and what you invest, a lot of people say invest 10%. I'm investing way over 30%. Way over 30%. The next one where it says buy a home with a 30-year mortgage, I understand that they did it with a prepayment penalty and all that, but the concept is still strong. Buy a home with a 30-year mortgage, make the highest payments possible without the prepayment penalty and get it paid off in 15 years or less. The main thing with having your home paid off is that no matter what happens to you in your life, you won't be homeless. That is a stress reliever. That also goes, I was going to talk about cars. That's actually on the next slide, so I won't bring up cars. Try to get your house paid off as soon as possible. So no matter what happens, you won't be homeless. And if you needed money, it's sitting there. You could do a refi and pull some money out, especially or a home equity line of credit, if you had your house paid off. The last one, I just want you to understand, if anybody ever says buy this or do this for a tax write-off, I want you to put your running shoes on and I want you to run as far away as you can from that person. There are no wealthy people that you will ever meet that will tell you do this as a tax write-off. It doesn't exist in the wealthy person's mindset. That's poor and middle class. Anybody that's ever said it to you, your financial planner, your CPA, your attorney, anybody that's ever said to you do this as a tax write-off, they are poor and middle class. They're not wealthy. That's a bottom line, just the way it is. So I'm sitting with my mentor. He looks at me and he goes, oh, you want to do this for a tax write-off? Cool. Write me a check for $100,000. I'll hand you $70,000 back. There's your tax write-off. Generally, people, well, it's a right. If you want to pay less in taxes, go buy this and this and this, and you're buying things that are depreciating assets that are going to lose you more money than the savings and the tax write-off anyway. If you know how to invest properly, your investments will return so much more than any little tax write-off. It's not even in the same world, especially if you're in real estate, any form of real estate, and you're taking advantage of a 1031 exchange. You pay no taxes when you reinvest. That's a whole nother ball of wax. People say tax write-off, or if you say tax write-off, you got that from your parents, you got it from your financial advisor, your CPA. They are not wealthy. Bottom line, I'm not saying don't listen to them, but if you want to become wealthy, don't listen to them. Leasing a car, I was taught long ago, do not under any circumstance ever lease a car for 2 reasons. Number one, that debt is very stressful, and this is why it's more stressful. if you read the fine print, and it says something like, if you drive this car over 10,000 miles a year, you're going to pay 30 or 40 or 50 cents a mile. I have met so many people in my life that leased a car and then they park it in the garage in October because they hit the mileage limit and they're freaking out about paying the penalty. That word freaking out is stress because of debt. We already talked about that. Try not to have stress. A lease is unbelievably stressful. That's why you shouldn't do it. Forget the tax write-off. The tax write-off does not cover the stress. And honestly, I've done it on both a personal car and a lease car. My CPA cannot find a money savings for me over leasing because there's a lot of fees involved in that. Have a minimum of 12 months cash reserve in the bank. This is one of my mentors. He said this to me word for word, and I transcribed it. If I don't have that much in reserve, I feel more naked than I would if I was naked in the Mojave Desert. When I get a huge commission check, or when I sell one of my parcels, or when I have a bunch of money come in, then I try to pay off my primary residence in 5 years or less if possible. That's just some mentoring he was giving, and I wrote it down. Have a minimum of a $3 million umbrella policy, especially as you become more successful. $1 million is nothing. $1 million is nothing. And the difference between a $1 million and a $3 million umbrella policy, I haven't looked at it lately. It's not much. It's I don't even think it's a couple $100 a year. And this was beat into me and beat into me and beat into me. Feeling comfortable is the goal. Always remember, the reason we have stress is because we have debt. Try not to have debt. I would not invest $1 in anything until I was debt free. So those of you that are self-employed, if you have a job, this is not really a topic I can really help you with, or it's not really going to help you if you have a sit-down job. But if you're a networker, you have got to learn power partnering. I've got a 1 hour and 45-minute seminar I did in front of 150 people. That entire seminar on power partnering is on YouTube. Send me an email and I'll send you the link. Just go to Ask Rick Silva, AskRickSilva, Ask Rick Silva on YouTube, and you'll find you have to dig for it a little bit. There's a power partner presentation that I did. But some people call it power partner, some call it collaborative partner, some people call it POI, some people call it COI, some people call it a biz dev partner, a channel partner. It doesn't matter what you call it. No matter what industry you're in, there are people in your industry. There are people in other industries who call on, sell to, and serve the exact same people you do. They already have your client. Find them, get in with them, and then you can exchange referrals. Okay, I'll go a little deeper here in another slide. So professional networkers do not look for clients. They don't cold call. They don't use websites. They don't use SEO and PPC. That's all lead generating, which there's nothing wrong with lead generation. There's nothing wrong with a website. There's nothing wrong with SEO. There's nothing wrong with PPC. There's nothing wrong with cold calling. It's not what networkers do. So if you're doing that, you're doing marketing, and there's nothing wrong with that. You're a marketer. But if you want to become a networker, you have got to meet other people and try to help each other get more business, not sell to each person, but help each other build relationships with other people. So I've had over 5,100 one-on-one coffee meetings. 5,100 one-on-one coffee meetings. And not in one of those coffee meetings that I offer somebody my products or services. And I'll give you an example here. If you were a real estate agent, all I would be doing is meeting mortgage lenders, builders, estate planning attorneys, divorce attorneys, CPAs, financial planners. That's all I'd be meeting with, and I'd teach them how to send me referrals. Okay. If I was a financial planner, I'd only be meeting estate planning attorneys, even business attorneys, CPAs, those types of people. I'd build a referral relationship with them, and I would never look for clients myself. I would find people who already had them. This is when I was telling you this is a 3-day seminar. It's longer than I could probably do 2 weeks, 8 hours a day on this one topic of power partnering. But if you want to be a networker, you got to stop looking for clients and you got to look for people who already have them. A major advantage of being highly networked is the more referrals you have coming to you without effort means you can spend more time on customer service, less time on biz dev. So I'm over 600,000 a year in income. I work 15 hours a week. I did that because I've had 5,000 coffee meetings. I used to work 80 hours a week and make 80 grand a year for like 10 years. And then 1 year it flipped on its head to where I can't even believe it. I can't believe the life I'm living, but I did it through networking, not cold calling, not advertising. I did it by meeting power partners, teaching them how to send me referrals. And one day I had so many referrals, I stopped looking. So I don't do anything now. The referrals come in, I service them, and my wife services them, and then I have time to do things like this for all of you for free. It's fun. I love it, and I don't need to make any money off of it because I don't need money. So it's fun. And I tell you, it is fun to make money. It's more fun to make money when you don't need it. It's just fun. You're helping people. I want to see you all get there. So learn how to build referral relationships, or you're always going to be cold calling. All right. And if you are a networker and you understand the term power partner, how many different industries can you name? My wife can name 163 industries for our land business, 163 different industries. And we've had coffee meetings with people in all of those industries except maybe 3 or 4. And if you're going to build a professional network and become a professional networker, try to have 3 to 5 coffee meetings per week, not per month, not per year, per week. 3 to 5 coffee meetings per week. In 3 years, you'll look back, your income is going to be 3 to 5 times more, and you're going to be working 3 to 5 times less. But you, again, also in the beginning, I said one of my favorite terms is network, not net lazy. Most people are too lazy to do it. All right, let's talk about 401ks. Now, this is a vehicle I have used to make millions of dollars and to help other people make millions of dollars, but not in the 401k, in something called a self-directed IRA, and I use that to invest in real estate. So I want to give you some ideas on 401ks and what I think about 401ks and what other people think about it, more importantly than me. So I want you to look at this picture and take it in. Look at that. It's still being built. Take a look at that house. That's in the Hamptons. Take a look at that house. Take a look at that house. I want you to understand what they all have in common. So let me ask you a question. Have you ever met anyone in your life who's become a multi-millionaire from a 401k? The answer is probably no, because the 401k is to keep you poor and middle class. That's my opinion. Let me show you who becomes wealthy from 401ks. Because the people that own those homes are hedge fund managers and the guys who create the 401ks and charge all those fees. The people who become wealthy from 401ks are the people who charge all the hidden fees that you in your lifetime could never, ever figure out. And I'm gonna show you some proof of that. But we're going to jump off of it just for 1 second. How long will it take you to become a millionaire? Find your age on the left side. And then look at the monthly number. That's how much you have to invest until you're 70 to become a millionaire. It's just something to think about. And that's at 5%. And I'll show you what happened to one of my investments, which is times 60 over that. So it doesn't take that long to become a multimillionaire, depending on what you're investing in. $1 million may never be definitely not enough to retire. The next slide will show you. There used to be an 8% rule, then it went down to 4%. Now they're saying 1.8%. But let's just play with this. If you were to retire now, and if you do not want to superannuate, and if you don't know that term, you better learn the term superannuation. Superannuation. Superannuation means running out of money before you die. You do not want to superannuate. When you retire, you cannot take out more than 1.8%, or you're going to superannuate, because you're going to live longer in retirement than we used to. So if you had $500,000 put away, you cannot take out more than $9,000 a year, or you're going to run out of money. I don't know about you, but $9,000 a year, that doesn't even pay my health insurance, let alone everything else. So you got to find other ways to become wealthy. And if you think $1 million or $500,000 is a lot of money, then unless you're living in a teepee on a mountain and don't have medical insurance or any other bills, I don't know how you would do it. The new number is minimum you should shoot for. The comically low number that you should shoot for is $3 million net worth, and that is low. So I didn't come up with any of this. In fact, almost every single thing in here came from someone else, not from Rick Silva. The important decisions were in yellow in the middle. The important decisions about 401ks are made by someone with no training or education. In most companies, 90% of the country's employees' 401k plans are watched over by people who need no special qualifications and no investing expertise or experience. That's from Smart Money. I didn't invent that. The impact of hidden 401k fees is colossal. Many fees are not required to be disclosed in a 401k prospectus, and they can eat up a whole bunch, as much as half of your what you've put in your investments over a 30-year span. That's from 60 Minutes. In the middle, we have Tony Robbins, and right here where my mouse is, from the book Money, Master the Game. But if we go up one to this paragraph, in a recent AARP study found that 80% of 401k plan participants were unaware of how much they were paying in fees. And what you don't know, you can't change. More and more employees are investing in their futures through 401k plans. Employees who participate in these plans assume responsibility for their retirement income by contributing part of their salary, and in many instances by directing their own investments, which is hilarious. However, hidden fees and retirement plans are confusing and are a major problem for retirement savers, explained Tony Robbins, life strategist, Money, Master the Game. On and on and on. You can do all your own research. The guy who invented the 401k wrote a book about what they've become, and it's a sad thing with all the fees. Again, if you don't believe those hidden fees you're eating up, go back on this recording and look at those houses again, because you're not going to be living in one of those, putting your money in a 401k. On this page, hidden fees and various backdoor payments are costing Americans about $17 billion a year. It can reduce an investor's overall retirement savings by as much as 40 to 60% on something that's only getting us 5 or 8, 10% in the first place. It's a rough way to become wealthy. And if you're going to say, Rick, I do it to save on taxes, I want you to go back a few slides and remember, anybody that tells you anything to do anything to save on taxes or for a tax write-off, they're poor and middle class. Always remember that. Let's talk about the missing link in investing. For me, it's land banking. I'm going to show you some examples of how I've become wealthy from it. I have an actual parcel that I own and what it's doing now, and I'll give you some ideas on how we did it. If you invest in the stock market or you have traditional real estate and you ever were interested in doing a 1031 or taking an old 401k, converting it to a self-directed IRA and doing a land investment with me and my wife, let me tell you who it is and isn't for. It's not for people who do not have a long-term perspective. It's definitely, absolutely not for people who think cash flow is going to make them wealthy. Cash flow can possibly, maybe make you comfortable. Cash flow does not make you wealthy. And then speculators who try to time the market. Those are gamblers. I don't know a lot of people that get wealthy doing those things. It's for people who don't like the volatility of the market. It's for people who have cash sitting in the bank, losing to inflation. They just are scared. They don't know what to invest in. It's for people, this one here, what says landlord, for the 4 T's: tenants, toilets, termites, and trouble. A lot of people have had issues with owning rental properties. We can help with them. business owners who honestly believe their business is what's going to retire them. And, a few people are right. But then there's a lot of people who think they're going to get $3 or $4 million for their business when they sell it because they're in love with it, when it's really only worth $200,000 or $300,000. We help a lot of people like this diversify, and then people who have cash in old 401ks or IRAs. So they have cash or old 401ks and IRAs, $25,000 to $2 million, anywhere in there. We can help people invest in land. Here's a visual of what land banking is, but the definition of it is the practice of buying affordable, pre-developed land in the path of growth. So take a look at this slide. I want you just to imagine where you live now or where you grew up. Now, I've been in the San Francisco Bay Area for 48 years. I haven't lived anywhere else, but think about where you live now or where you grew up. Think about what it looked like 5 years ago, 10 years ago, 15, 20, 25, 30, 35, 40 years ago. Think about that and think about now. I'm going to promise you this. The people that own the land where you go, oh my God, remember that was just a ranch and now it's a shopping mall. Oh, remember that? Now it's a housing development. I want to assure you of one thing. The people that own the land made way, and I mean way, way, way more than the developers did. You just think back over the history of the world, think about the wealthiest people in the world. They were landowners and land barons. There's the term land baron. You've never heard the term house baron. You never heard the term building baron. It's land baron for a reason. So take a look at this picture. This is probably going to remind you of anywhere in the country where you grew up. This is 2002. Backdated Google image. This happens to be in Southern California. If you look at the yellow lines, this slide made me very wealthy because when I saw these two slides, this is when I decided to buy land and help other people do it. These yellow lines are where the roads ended up, but in this picture, there are no roads, and this on and off ramp is not built. 50 to 150,000 per acre in this picture. 50 to 150,000 per acre. We're going to jump ahead 10 years. This should not shock you. Where you grew up looked like the first slide, and now it looks like this because this happens all over the country. It just so happens to happen about 20 times more. It happens so much in Northern California, there's nowhere to buy land anymore because it's too expensive. There's still opportunity in Southern California. We go from 50 to 150,000 an acre in 2002 to 2012 to 2 million to 7 million per acre in a 10-year period. So there's your visual of what I do my other half of my life, where we help people invest in land. Another concept, be open to opportunities. Just be careful with who you listen to. An example, 5 years ago, I bought a Mercedes. I don't have it anymore. That's when I was trying to feeling like I was more important than I was. I went out and bought an AMG Mercedes. It was used, but I still bought it. Saved a ton of money on it, but it's a mistake buying it. The guy who sold it to me, after we were done, I saw him drive off in an older Toyota pickup truck. So I bought a Mercedes from somebody who didn't even drive one. If you're taking real estate advice from somebody, I'm hoping that they own, especially if it's homes, I'm hoping that they own multiple homes that have made millions of dollars with those homes. If you're looking at buying buildings, I hope you're buying buildings from somebody who owns multiple buildings and has personally made millions of dollars from those buildings. Me personally, I help people invest in land, and I personally own millions of dollars worth of land. I control 1.2 million square feet of land on multiple parcels in Los Angeles County. That's me personally. Cool little saying here. In America, everybody has a chance to become a millionaire. The problem is most people don't recognize the opportunity because they're listening to the wrong people a lot of times. So always ask yourself, well, how much does your investor, and you got a financial planner, do you make more than him? You're taking advice from somebody. Do they make less than you? What are they worth? Just be careful. Please be careful who you take your advice from. Okay, one of my final thoughts. This book changed my life in so many ways, I can't tell you. If you've heard of the book Think and Grow Rich. So everybody talks about the book Think and Grow Rich. I have a problem with Think and Grow Rich because I can't get through it. It's very, very, very hard for me to understand because it's written in more of an old English type of form. It's something that's very hard for me. Now, Napoleon Hill wrote Think and Grow Rich by interviewing people like Henry Ford and Andrew Carnegie. So, this book, called The Wisdom of Success, on Audible, which is the greatest invention in the history of mankind. If you don't have Audible, I highly recommend it. On Audible, it's called The Wisdom of Success. In hard copy, it's called The Wisdom of Andrew Carnegie, and that's in book form. So let me tell you what this is. It is a word-for-word interview between Napoleon Hill and Andrew Carnegie, where it's literally says Hill, Mr. Carnegie, blah, 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 and then it says Carnegie, and it's Andrew Carnegie answering the questions. The entire book is a word-for-word Q&A between Napoleon Hill and Andrew Carnegie. Changed my life 100 times more than Think and Grow Rich did, because me personally, I just can't get through Think and Grow Rich. So I can't recommend enough in hard copy The Wisdom of Andrew Carnegie, or in book form, in Audible form, The Wisdom of Success by Andrew Carnegie. We've talked about this before, the myths about money. Working hard is not going to get you wealthy. So that's what, and this sounds like a quote from Robert Kiyosaki here, Rich Dad, Poor Dad, but it's like we've all heard this. My dad always said, get a good job and work hard. But all my mentors taught me, you got to invest for high returns, and you got to find ways to make money when you sleep. The last thought is that a lot of what you know about your investing and what you've done in your life, you learn from your parents. Now, if you're over 40, I'd say 99% of us over 40, our parents had a pension or some form of a retirement plan. I'm going to say if you're under 40, the chance of you having a retirement plan is so slim, I don't even know how many still exist. So my father never put a dollar away because his retirement plan, he's getting like $6,000 a month for the rest of his life. He didn't need to have a big, huge saving plan because he had guaranteed money coming in a retirement plan. So, because most of us don't have that, we need to find other ways to create wealth, because we're going to have to live on our money. We're not going to have other people helping us. You think Social Security is going to help you? If you're planning on Social Security, then you're not planning on becoming wealthy. You're going to be a greeter at Walmart. So when you listen to your parents or do what your parents did, if they had a pension plan and you don't, you can't do what they did. You have got to learn to invest and create your own wealth to live on it. Now I'm going to show you one of my 8 parcels right now and what I'm going through currently with it, to give you an idea how you can create wealth by investing in land. And if you're interested in learning more about it, then you contact me and I get you in touch with my wife. We do webinars every month. You can hop on one of her webinars to learn how to diversify some of your money into dirt. But I want to show you what's happened to me in my life. And some of you have been watching me for years, the last 6 years with my land banking business. I want to show you one of my parcels just to give you an idea. So let me set the stage here. I bought a parcel in December of 2014 for $92,000. It's in Southern California, 92 grand. There's only 3 things you need to know. 92,000 bucks, 1.84 acres, zoned light industrial. Okay, that's the parcel right there, that black square. I'm going to show you an actual photo of it now. Actually, in a second I will. So December of 14, I paid 92 grand or $1.15 a foot. I didn't buy a house in the Bay Area for $500 a foot. I bought it for $1.15 a foot. 6 months later, I got an offer for $126,000 or $1.57 per foot. I laughed. A lot of people thought I was crazy because it was a 36% return, or annualized at 70%, which in the business I'm in is not impressive at all to me. So Here's an actual photo of my parcel. It's right here, this one. Now, my 1.84 acres of land right here. I'm across the street from a Whirlpool distribution center. It's a giant factory. To give you an idea how big this building is, it's a quarter mile long and an eighth of a mile wide. These are diesel trucks lined up right here. That's how big that building is. This is the distribution center. I own distribution center land right next to it, right there. 1.84 acres. I paid $92,000 for it. So the people that want to build on it, they start sending me offers, and I've been trained by our company on what to say to the developers. I know exactly what to do, exactly what to say. My parcel's right here, right there. They start sending me maps. There's my parcel right there. This map made me a lot of money, and I'm going to show you. I'm going to zoom in twice. Let me back up real quick. This right here, they want to build a 1,000,000 square foot building. There's my parcel right there. I'm going to zoom in twice. This square right here is my parcel. You'll see these dotted lines and these dotted lines right here going right through my land, because this 1,000,000 square foot building is going to have the water and the wastewater for the building going right through my land. There's a loading docks for the building. This is my parcel. All of these other parcels the developer has to buy before they could build their building. Land banking is the practice of buying affordable, pre-developed land in the path of growth, blocking developers. So let me show you financially what's happened to me. They sent me these maps, so I knew I was in total and complete control. Again, I paid $92,000 for it. That first offer was in, let's go back and show it to you. It was a verbal offer, so I haven't printed, but June of 15, $126,000. Okay, land does not call you on the phone. It's a very, very boring investment. It just sits there until the phone rings, and the phone rang with a $365,000 offer a year and a half later. So the offer, I bought it at $1.15 a foot. I get an offer for $4.55 a foot. That's a 296.7% overall return, or 131.9% annualized return. Lukewarm, because I know what other land in the area is going for, because that's the business I'm in. So I said not interested. Now keep in mind that was in March of 2017 that offer came in. I get more pictures, I get more drawings, I find out other developments that this company's done, and I just sit and wait. And a month later, there's the next offer. So we've gone up now $300,000 or $400,000, and $300,000, $200 and whatever $1,000 in 3 weeks, because I just kept saying no. So these are the numbers. I bought it again December of 14. The $500,000 offer, now we've gone from $1 a foot to $6 a foot, 444% overall return, or 190% annualized return. I said no. They called me back a couple weeks later, and I said, do you guys really, really, really want this property? And the guy goes, we really, really, really want this property. I said, good. Take the 5 off and make it a 6, and I will agree to the amount, but not the terms yet. So a couple weeks later, 3 weeks later, I get this offer for $600,000. I bought it. Remember, I bought it for $90,000, $600,000, 2.5 years, 552.1% overall return, 228% annualized return. I bought it for $92,000, selling it for $600,000. So when people say, well, I only invest for cash flow, I don't. I don't believe in any investment that gives cash flow, because an investment that gives cash flow cannot arbitrage. If you don't know what arbitrage is, that may be one of the reasons you're not wealthy, because if you invest for cash flow, you are not going to become wealthy. This is how you can become wealthy. So maybe you have said some things like this, or you know people that have. These are the types of people that I would love to help. People that say things like, I want to diversify my portfolio. My 401k or IRA only goes up when I put money into it. I need to recoup money I lost during the downturn. My investments are stressing me out. I'm sick of tenants, toilets, termites, and trouble. The stock market too volatile. I need to do a 1031 exchange. Oh my God, how am I ever going to be able to retire? Those are the types of referrals I'm looking for. If you know somebody that might be interested in talking to me about investing in land, we pay referral fees. I can tell you about that later. So number one, I hope you found the webinar helpful. I hope you learned some concepts. If you're interested in talking to me more because you have $25,000 or more sitting around in cash or an old IRA or an old 401k, and you want to talk to my wife and I about how to diversify and create wealth that maybe you haven't been able to do in the past, I'd be more than happy to help you. That's my email address. It's either Rick at B2B, which is where you got the promotion for this webinar, Rick at B2B Gathering, or Rick at dirtisgold.com. Again, we finished it up in an hour and 2 minutes. My goal was an hour and 55 minutes, an hour and 5, so I got it done in the window I was hoping for. Thank you very much for getting on. Thank you very much for spending your time. I hope you enjoyed it. Again, there's my email address, rick at dirtisgold.com. I really appreciate you getting on. After I stop this recording, I'll upload it to YouTube, and I'll do everything I can to get you the recording by tomorrow. Again, thank you very much. If you ever want to talk, just pop me an email. Be more than happy to spend time with you. Thanks again. See you soon. Have a great night. Bye-bye.